What's going on, everyone? Let's talk Bitcoin. Okay, first topic, scarce versus finite. There's a lot of scarce things out there in the world, right? Gold, diamonds, land, um, tons of stuff out there. Now, with all those things, even stocks. Now, with all those things, as demand increases, supply comes and increases to meet that demand. So, for example, with gold, as the price of gold goes up, miners are incentivized to hire more people, to create more infrastructure, to set up more machinery, or to even go and tap mines which were previously too expensive, cost prohibitive to go and set up mines. So, as the price increases, now it's cost effective for them to go and mine those mines, hire more people, more supply comes into the market to meet that demand, levels off the price, or it even decreases the price as more gold comes into the market to meet that demand. Same thing, for example, for oil, right? As the oil price increases, more oil will be drilled, more oil will be extracted, and it will come to meet that demand, and so it creates a kind of balance. Even some people might say, well, land is finite. No, it's not, because as an area becomes extremely popular, what you'll commonly see is people will start building upwards, right? And so they'll it's kind of like a way to cheat the system and still have that housing without necessarily having the actual land, right? Or in places nowadays, they even have man-made islands where they'll come and create islands and land where you can go and build on it, airports and this and that or whatever on there. And areas which were previously didn't have civilization because maybe they were out on the outskirts a little more, there wasn't infrastructure or whatever. As an area becomes extremely popular, it now becomes cost effective for developers to go and develop outward and set up the infrastructure and use that land which previously no one was using. So even land is not finite, right? Eventually we'll even go to Mars, we'll go to other planets, but that's besides the point. Now, with Bitcoin, on the other hand, it's a finite resource. No matter how much demand there is, the supply cannot increase past what the algorithm allows it to increase. There will ever be 21 million Bitcoin. Right now, as of the time of this video, I think about 18 million or so Bitcoin have been mined. And there's an algorithm set up where it follows a steep curve, and over time, every block in the blockchain, new Bitcoins are mined. Every block in the blockchain, the miner who basically guessed the hash for that block is awarded the new Bitcoin. As of the time of this video, that's about 900 new Bitcoin every day that's awarded to miners. Now, even as new miners come on, they're incentivized. Say, wow, okay, one Bitcoin is going for $40,000 right now, and maybe it will go even more. As the price goes up, more miners are incentivized to come in, buy mining machinery, and try to mine. But even as new miners come in and start to mine, they can't mine more than, as of right now, 900 Bitcoin a day. That's just the way the algorithm works. As more miners come in, the mining difficulty adjusts so that it's more difficult to mine and guess that hash, which awards them. They're all competing to kind of guess this hash, and then accordingly, the one who guesses it wins the Bitcoin. The difficulty to guess that hash is set by the algorithm in a way so that approximately every 10 minutes, one of the miners will randomly, well, not randomly, but according to the amount of hash power they have, guessing power that they have, will be awarded the Bitcoin, the new Bitcoin that's mined. That's how it keeps it, so that every 10 minutes a new block is put on, every 10 minutes some new Bitcoin is mined and awarded to a miner. Now that's set. Again, the supply can't increase beyond that. So even as the price starts to skyrocket, sometimes you see in these cycles, in these phases, that supply isn't adjusting ever to then come in and meet the demand, and that's why you see these squeezes of the price, and all of a sudden it starts skyrocketing. Now, that's genius as it is, considering it's the only finite asset in the world. To take that another step, built into the algorithm is every 4 years, a thing called a halving occurs. Now, in the halving, the amount of new Bitcoin that's mined per block is cut in half. So every 4 years, let's say right now it's 900 Bitcoin a day that's mined. In another 4 years from now, that will be cut in half, and half the number of Bitcoin will be mined per day instead. And so what this does is, all of a sudden, when one day that supply reduces, the new supply coming into the market every day reduces by 50%, which is a lot. Demand is approximately the same. That creates a kind of shortage of Bitcoin in the market. Prices start to adjust for that shortage. People even start to front run this, because they know, hey, this is going to happen. So people start to front run it, and the price starts to climb, and that's what creates these cycles that we've seen so far every 4 years in Bitcoin. So unlike other assets where supply comes to meet demand, the opposite happens in Bitcoin. Every 4 years, the supply actually, the new supply coming into the market actually cuts in half, right? So it's the opposite effect, where as supply is coming into the market in the other ones, it's evening out the price, it's dulling out that increase in price. Here the opposite is happening, and it's creating those crunches. Now, something being finite in the physical world is amazing as it is, right? But in the digital world, this is even more incredible, because it was an extremely complex problem that we had been trying as computer engineers. We had been trying to solve since ages. Why? Because everything in the computer, essentially, at the foundation, is just zeros and ones. So you can copy paste anything. Zeros and ones, you can just copy paste, right? So if you have a digital money, what's stopping me from copying that money and creating more money, right? What's preventing me from double spending that money? I could take that file that's just zeros and ones, and I could send it to person A and send it to person B, right? What's stopping me from creating more of that? That was the reason why you never had a truly digital native money, right? You had kind of these zeros, these numbers representing what money you had in a ledger of some company, like some bank, Chase Bank or Visa or whatever, but you never had a truly digital native money. Bitcoin is a bearer asset. It's a digital bearer asset, and it creates this method so that using the blockchain, using a distributed network, where nodes on the distributed network all have a copy of this ledger, what the Bitcoin that you have is recorded on that ledger, and you hold the keys to that Bitcoin. So in this way, for the first time ever, it has created a digitally finite asset. That's a huge thing, and it can't be recreated so easily. So not only in terms of finance is that a really big thing, that you have a finite asset for the first time ever, but digitally that's a really big thing as well, because it means that now, without intermediaries, without banks, without financial institutions, you can come in and have a money of the internet. You can have an internet money, which is Bitcoin. You can have your browser go and pay, 1/100th of 1 cent in Bitcoin for reading an article. You can go and, as you watch a video, you can stream money like you stream data, or like you stream, like you stream voice, like you stream video. You can actually stream video and pay a fraction of a penny for every second of a video that you watch, right? You can go and digitally pay somebody their salary every minute instead of every 2 weeks. All these things are possible as we build out layer 2 of Bitcoin, which is the Lightning Network. Bitcoin is the settlement layer of that money. And the Lightning Network on top of that will allow all these kind of fast transactions and things like that. But underneath, you have this finite asset for the first time in history. And that's why you see this massive growth where supply can't come in and meet demand. We'll have other videos where we'll talk about the Lightning Network and some of the other implications of this, as well as several other factors of Bitcoin. Thanks for tuning in.